Now let's see the next question, which was asked in 2011. So the question talks about that what is the difference between the vote on account and interim budget, right? So we know that vote on account is used as for the advance. Vote on account is used as an advance, and interim budget is also known as a transitional budget. Transitional budget. Why transitional budget? Because it is either presented by the regular government going to election, which is due in a month, in 2 or 3 months, or it is presented by the caretaker government. So that's why it is known as a transitional budget. If the regular government is there and if election is due, so they will not present the full budget. It may be that after elections the government may change, so the government according to which get mandate will present their own budget. So the regular government present the interim budget. Also it is presented by the caretaker government. Clear? Now if we see the statement, so the first statement says the provisions of vote on account is used by the regular government, while an interim budget is a provisions used by caretaker government. Now if we see that the vote on account is regular used by regular government, true, but interim budget is provision used by only by the caretaker government. No, it is also used by the regular government. So interim budget means a transitional budget. So on the basis of this we can say that first is incorrect, right? And we need to mark the correct answer. Now if you see the second statement, so a vote on account only deals with the expenditure in government's budget, while interim budget includes both expenditure and receipt. So this is true. The vote on account is only dealing with the expenditure. It is an kind of the parliament give advance to the government to run the government till the budget is passed. This is a kind of advance given by the parliament to run government till budget is passed. Right? And this advance is given out of the 1/6 of the total demand of grant. And as we know that the budget take 2 to 3 months to pass, right? And the the budget session before 2017 started at the last of the February, and it may take around May to pass, right? So it takes 2 to 3 months to pass, but the financial year of the government start from the 1st April to 31st March. This is a financial year. So the government needs some money to run, to pay salaries, to pay dues to for the betterment of the society, the schemes. They need money to expend. So the parliament allows and 1/6 of the total demand of the government as an vote on account, through vote on account. So this is an kind of advance given by. So yes, it is an expenditure in the government budget. So receipt is not been discussed. But when anyone present an interim budget, it also includes the expenditure and receipt. It is a kind of budget, but as an interim budget means transitional budget. There will be a small budget for the small period. This is basically for a small period. A period may be of 2, 3 or 4 months or 5 months when the election is due. So on the basis of this, the second statement is true. So the answer to this question is B. That is only second is true. Now if we see the explanations to these questions, so explanation says, but both vote on account and interim budget can be used by regular government or caretaker government depending upon the situations. There is no constitutional restrictions limiting a vote on account to regular government or an interim budget to caretaker government. Clear? So it can be used by the both. Now, if you see the interim budget, on other hand, is comprehensive budget that includes estimates of both revenues and expenditure of entire financial year. So, on the basis of this, the second is true, and the basis of the first, we can say the first is incorrect. Now, a vote on account is concerned only with the expenditure side of the government's budget. It allows the government to withdraw funds from Consolidated Fund of India to meet essential expense for a shorter period, and the fund is 1/6 of the total demand for grant has been granted by the Parliament. Clear? So, these two statement makes the second statement true, and these makes the first statement incorrect. So we can say that answer to this question is only 2. Clear? Now if we move to the next questions. So the next question was asked in 2011. So the question says the authorizations for the withdrawal of funds from the Consolidated Fund of India must come from. Now this has repeatedly been asked by the UPSC, and we have also discussed that out of the three funds which is provided by the Constitution of India, only one fund, that is Consolidated Fund of India is under the parliamentary control. So the withdrawal of money from the Consolidated Fund of India is come from the Parliament of India, right? Now, do the President have power to release fund? Yes, it is from the Contingency Fund. It is from the Contingency Fund of India. So President release fund from the Contingency Fund. This is also known as Emergency Fund. So withdrawal from a Contingency Fund, the Parliament approval is not required, but a withdrawal from Consolidated Fund of India, the Parliament approval is required, right? Do the Prime Minister has any fund to disposal of the Prime Minister? No. Directly there is no such fund, but when President will release from a Contingency Fund, that will on the advice of Council of Ministers, including the Prime Minister. So they are not directly responsible for the releasing of fund, but the President of India have a disposal of Contingency Fund, which has to act on the advice of Council of Ministers. So this too cannot be the answer, and A also cannot be answer because it does not allow the Consolidated Fund. So requirement of permissions of Parliament is required to withdraw the fund from money from the Consolidated Fund of India. Clear? Now if we come to the explanations to this question, so if you see that Article 266 of Indian Constitutions deal with Consolidated Fund and Public Account Fund. Consolidated Fund, as per Article 266 Clause 3 of Indian Constitution, no money can be withdrawn from the Consolidated Fund of India without the authorization of Parliament, and this has we have already seen this. Public account, so money other than those credited to Consolidated Fund, example Provident Fund, small saving, other deposit, is credited to Public Account of India or the respective state. So there is a Public Account of State also. These funds are held in trust for specific purpose and can be used without legislative approval. So this is also under the executive control, we can say that. Okay. Now executive control means there is not required a permission. So executive control does not mean the President will release fund, right? Public account, we can say that when you go to the ATM to withdraw money from the ATM from your account, that does not require done permissions from Parliament or executive. It means that is under the disposal, that comes under the executive. Clear? Now when we see the Article 267 of the Indian Constitutions, that deals with the Contingency Fund of India. So what is Contingency Fund? The Contingency Fund of India is created to meet unforeseen and urgent expenditure. The fund is placed at the disposal of President of India, who can authorize its use for emergencies without prior approval of the Parliament. Later, the amount withdrawn from the fund must be approved and replenished through the parliamentary authorizations. So the sum which has been used from the Contingency Fund must be returned after the approval of the Parliament, means after the debate why the government has withdrawn, where it has used. So all that debate will be done, and then that amount of sum will be deposited into the Contingency Fund for the future use. Now there is a contingency fund of state also. So similarly, every state can establish a contingency fund under the control of the governor to address unexpected expense at state level. The state legislature is required to approve the replenishment of the fund. So similarly, as we know that we follow a parliamentary form of government at both the level. So the functions of a parliament is almost the similar to that of an function state legislature. So they have also the same kind of arrangements in the states. Is it clear? So let's move to the next question. Next question was asked in 2011. So let's see the question. So all revenues received by the union government by way of taxes and other receipt for the conduct of government business are credited to contingency fund, public account fund, consolidated fund of India, or deposit and advanced fund. So now it says that all the earning of the government. So now as we know that the Constitution of India has provided three funds. Article 266 talks about two types of fund. One is Consolidated Fund of India and the another is Public Account Fund. Whereas Article 267 talks about Contingency Fund, also known as Emergency Fund of India. Clear? Now, how the money comes or into these accounts? So this is a main fund of the government where all the incomes of the government, whether from they raise a money from the loan or interest, whatever the way they earn the money come into the Consolidated Fund of India, right? So all the incomes come into the Consolidated Fund of India. All the expenditure of the government is done from the Consolidated Fund of India. So the income they earn will be deposited, will be credited into Consolidated Fund of India. The spend will be from the debited from the Consolidated Fund of India. And when we talk about a public account fund, so this account is created to credit others incomes of the government which covers under the Consolidated Fund of India, like PPF, Provident Fund, saving account money, any license fees or anything that will be credited into the public account, or court fee will be come under the public account of India, right? And the contingency fund, this is fund created for the emergency fund, and this fund is been credited, the amount credited from the Consolidated Fund, from the Consolidated Fund of India after the authorizations of Parliament was done, but its expenditure, or you can say that withdrawal, is at the President approval. And so this withdrawal is approved at the parliamentary or parliament hand. So parliament can approve a withdrawal from Consolidated Fund of India. So now if you go to the question that all revenue received by the union government by way of taxes and other received for the conduct of government businesses are credited in, and we can see the contingency fund is an emergency fund. So this fund is credited from the Consolidated Fund. So this cannot be the answer. The public account fund, this account is created to credit the funds other than the like PPF or we can say that judicial fees and everything. So the answer to this question is Consolidated Fund of India, which is a main account or main fund of India from where to which all the incomes of the government credited and the government expend from these fund, and because of this it is up to the parliamentary approval, the withdrawal from appropriation through appropriations bill. Clear? So this is an answer to this questions. Now we move to the explanation to these questions. So here I have given the detailed explanations related to the consolidated fund and contingency fund and public account fund. So if you see, the consolidated fund of India is the most significant government fund established under Article 266 clause 1 of Indian Constitution. So what are the source of revenues? So all tax revenues, that is income tax, GST, custom duty, excise duties, non-tax revenue, that is profit from the government enterprise, fines, penalties, loans raised by the government, internal and external, from where the government takes loans, repayment of loan given by the government, right? Suppose that Indian government has given the loan to someone, given a loan to state, so the interest on that loan or the payment on the full recovery of that loan will also be credited into the consolidated fund of India. So these are the sources of consolidated fund of India. Now where the fund will be used, so what are the uses of fund? So all government expenditure except those from the contingency or public account funds, so those come from contingency and public account, are made from the consolidated fund of India, includes salaries of government employees, welfare schemes, infrastructure projects and defense spending. All comes from the consolidated fund of India. Now withdrawal rule. So money cannot be withdrawn from the consolidated fund of India without parliamentary approval. Charged expenditure, certain expenditure, that is salaries of the president, Supreme Court judge, CAG, do not require voting but must be presented to the Parliament. Voted expenditure, other expense must be approved by Parliament through the annual budget. Clear? Now it is managed by the government. Who manages the Consolidated Fund of India? So it is managed by the Government of India under the authority of Ministry of Finance. So Ministry of Finance has been responsible for the manage the Consolidated Fund of India. Now if you see the contingency fund, so this fund is used for emergency expense and is placed under the disposal of President under Article 267. It does not receive regular government revenue. So this is not a fund where the regular government revenue has been received, but a certain amount, lump sum amount has been, or a fixed amount is paid into this from the Consolidated Fund of India after approval of Parliament. Next is public account fund. So this includes the funds from the government holds in trust for a specific purpose like provident fund, small saving, pensions or judicial fines, etc. These funds do not belong to the government and are not used for general government expenditure. This is for a public, as the name suggests, public account of India, where the public deposit their money or related fund has been deposited. The last options under the question given is a deposit and advance fund. So what is this? So this is a part of public account of India and consists of funds related to various government deposit and advanced. It is not used for crediting tax revenues or receipts. So it is a part of public account of India. So if we see now through these questions, I can say that the funds of India has been deeply discussed, or we have thoroughly discussed every concept and what factuals also. So whatever the questions come from this fund in the examinations, I hope now you will be in a position to answer the that questions. Clear? Now let's move to the next question, which is the last questions of this Parliament series. So the question was asked in 2011. Says that when the annual budget is not passed by the Lok Sabha, then what will happen? So if the budget has been presented in the House and if it is not passed, right? So how, so first, before going through the options that what will happen to the, what are the repercussions of not passing a budget, now we will see how budget can be denied. So the way through budget deny, what are the mechanisms? So we can say the tool used by the oppositions to deny the budget is a cut motion. Now this cut motion is used by the oppositions, used by opposition during vote on demand for grant or grant, right? When the government put their demand for grant during the vote and the House has to vote on demand for grant, the oppositions use the cut motions. So oppositions, it has been, they have been tooled with the cut motions. The first is policy cut motions. The second is economic cut motions, and the last is token cut motion. Token cut. Now, when we see the policy cut, it means denial of the total policy. Denial of whole policy. Whole policy. And the reduce the demand to rupees 1. It means the government says, the parliament says that we will provide you only rupees 1 for your policy what you have asked, irrespective of the amount asked. So it means they denied the whole policy. This is an policy cut. Now when we talk about the economic cut, this is an amount, a lump sum amount is cut. A lump sum amount is cut from the demand. So if they have asked for the X amount, so suppose they will cut that X by 2 or X by 3 amount from the total demand of demand asked. So their lump sum account. Now when we talk about the token cut, so in case of this, token cut will be used by the oppositions to show their uh, uh, what we can say resentment against the government, and reduce 100 rupees from the total account, total demand, right? To show that we are not happy with you, we are not we are angry against you, or show their angers or not support. So they will cut a token amount of 100 rupees. Clear? Now this is how the parliament can deny the budget. But if the cut motion is passed, what does it mean? It means that the government has lost its majority in the house. Lost its majority in the house. And opposition has now the opposition has gained majority. Opposition has gained majority. And we know that according to article 75, that council of minister will remain in office till they enjoy the confidence of the house. And confidence of the house means they are know to be they enjoy the majority. So the failure of government budget means that the government has losing its majority, or it's lost its majority. So this means that government has to resign from the office. So now if we see the what is an effect of when the annual budget is not passed by the Lok Sabha. So if we analyze the this options, so the first is the budget is modified and presented again. No, they have lost the majority. So in case of majority, they have to resign from the office. Clear? So the first cannot be answer. Second, the budget is referred to the Rajya Sabha for suggestions. No, Rajya Sabha has no power with respect to budget. No power with respect to budget. Clear? Union Finance Minister is asked to resign. Not the Union Finance Minister, rather the whole Council of Minister has to resign. So the Prime Minister submit the resignation of Council of Minister. Yes, it is true that he has to submit the resignation of Council of Ministers, because his government has lost the majority and he has no majority that the budget should be passed in the Lok Sabha. Clear? So this is an answer to this question. Now if you see the explanations, so according to Article 112, which talk about the annual financial statement. So according to Article 112 Clause 1, the President shall, in respect of every financial year, cause to be laid before both the Houses of Parliament a statement of estimate, receipt and expenditure of Government of India for that year. In this part, referred to as annual financial statement. Clear? So this is a budget. What is budget? We have seen what the budget means. Very clear. Now if you see what will happen, see the explanations too. If the budget is failed, so if the budget is not passed, then the budget is essentially a confidence motion for the government, because it involves financial proposal for running the administrations. If the Lok Sabha reject or fail to pass budget, is considered a loss of confidence in the government. As a parliamentary norms, the Parliament and Council of Ministers must resign, since they no longer enjoy the confidence of the Lok Sabha. The president may dissolve the Lok Sabha and call for a fresh elections if no alternative government can be formed. So after resignations of the prime minister, it is not necessary that president calls for the dissolutions. It may, if there is no alternative or there is no one to form a government, then only the president can dissolve the house after the resignation of prime ministers. Clear? So this is all from the parliamentary section. Hope I have covered every part of this questions, and hope you have it helps you in your preparations. And being the largest section in the polity section, the this legislative part, it's is benefiting you. So thank you for this, and hope you enjoy. Hope it's help you in preparing your examinations. I would like to request you that please subscribe the channel. Please like the video if you like it, and make comment also about the videos, how it is you helpful to you, and ask your friend also who have been preparing to visit the channel and subscribe and go through the channel and view the content and also like and comment. Thank you.